Can you see the question now?
Yes, ma'am.
Okay. So that was the question we did last time by FIFO method. Then did you try the same question with LIFO method
Ma'am, we did the LIFO method on Friday.
and FIFO?
Yes, ma'am, we did the FIFO method on Friday. We just didn't do the weighted average method.
Okay. Is anybody tried with the weighted average method? Okay, there are
No,
various
ma'am.
methods. Hello, can you hear me?
Yes, ma'am.
Okay. So why we need another method when the LIFO, FIFO, matrix and simple average method was there? The reason is uh, each method has is their advantages and also the disadvantages, and sometimes the disadvantages are more than the advantages. Do you know what are the advantages of using FIFO method, first in first out method for stock valuation? What are the advantages? Just one or two. The advantages of using FIFO
Ma'am, you get to record inventory up to date.
by FIFO.
Yes, ma'am. By FIFO.
Okay. Any other view? Anyone else? Can you try? Like in inventories, because sometimes in the business people they buy the stock many times. Like in this question, the question you have seen on the screen, there is only 5 entries. Sometimes there are more than 5, it may be 10, 20. So it is a difficult job for the accountant to remember and to check every time when the some units are left, what are the prices of remaining unit. So then they have to look around all the rates on which the goods has been purchased from the store ledger or from that book which has been kept at the warehouse. So normally we always take the prices of the good issues from the beginning when the price of material is increasing, and any material which is left over is always left with the higher price, and that's why the value of closing inventory is higher and the profit and the cost of goods sold is become lower, which is also result in higher profit. When the profit is higher, the tax liabilities also become higher. So business has to pay uh, more cash as a tax charges. And FIFO method is also not suitable in some of the business when there is a situation of hyperinflation. You know the meaning of inflation? When the time the prices of commodities are increasingly very high. In such a time, there exists no reasonable pattern of the inflation and prices of the good, because in that situation, the charges of closing inventories become too high. Then, when we are doing the valuation of stock on inventory, uh, under FIFO method, it is easy to apply. The method is easy to apply, but not really give the adequate result in terms of performance of the business, because when the value of closing inventory is high, the stock is left at the end, then it may be affect the business reputation, because when the closing inventory is high, the cost of goods is become less and the profit will also higher. So sometimes the company not really having that much profit, which is shown by the books of accounts. So if it is shown higher, they also need to pay higher dividend to the shareholder, and the tax liabilities also increase for the business. And this method is a little bit lengthy, so it's a time consuming because you need to remember the rates every time. What is the rates at the beginning, what is the rate at the end, and you need to consider also the quantity each time has been received from the various order, and that's how it will affect. So when you are checking all for all the material which is kept in the store, it will take lot of time, so it's a time consuming activity. So the another major disadvantage is a time consuming activity. Okay. And weighted average method. So if we compare to the LIFO, FIFO and weighted average, the weighted average method is always more comfortable, because under that method we calculate a new rate, and new rate helps us to determine the value of inventory as well as the value of goods which is issued during the year and the closing stock. So this is about FIFO, first in, first out. Do you also know any advantages and disadvantages of using LIFO method? Any advantages and disadvantages of using LIFO? The LIFO method, which is in detail called last in, first out, right? Where the value of a stock is based on the last item produced or places into your inventory. Stock are to be considered as a first item to sale. Whatever they receive at last has to be issued and sold at first. So just anybody can give me at least one advantages of using the LIFO method. Anyone can try one advantages of using the LIFO method. Quickly, anyone can try. Hello, can you hear me? Okay, and uh, the LIFO method is more considerable suitable when the prices of material are increasing, like in the time of inflation, because when the prices are increasing, the prices of commodities at the market is higher, so that time is better for them to use the higher rate material for the production, because when the prices are already high at the market and they also showing the higher cost, it doesn't affect with the competitor, because that time most of business also have the higher selling price. So this method is good when the inflation is there and the prices of commodities are higher, so that they can show a higher cost, and then it will affect the profit. Profit will be lower, and when the profit is low, it will also offer the best tax issues. The tax amount will also going to be lower, and low dividend need to pay to the government, or to the, yes, to the government. So this method is good in terms of offering tax benefit, and improve the cash flow, because when they sell on a higher price, they also get more cash, and more cash can also improve the cash flow in the business. And the other one, it can also align with the, just a minute, afternoon HOD, how you say? Uh, all right. So I was saying that the other advantages of LIFO method is, it is good for the businesses if they are, if they want to show the higher uh, cost value but lower the profit and lower the dividend. Okay, then it will give a good picture of the business, but it may be somehow affect the reputation of the business. Okay, so each method has its advantages and disadvantages, either is FIFO, LIFO, or weighted average. And to come up with the weaknesses of all these methods, a new method has been introduced, which is called weighted average method. And under weighted average method, you no need to recall or remember the rates of each purchases of the material which is done by the business from the supplier, because a new rate has to be introduced, which is called weighted average rate, to determine the value of ending stock and also to determine the value of issues. So like here, the question you can see in front of you, this business doing the valuation of inventory on half yearly basis or 6 months, and these are the details of purchase of material in the 6 months period, and these are the detail of what is called issues, the out of the material purchasing, how much material has been issued. So how do we determine the weighted average rate? Not just by using this per unit price, but also the number of unit which has been purchased. So we multiply uh, each time the unit times their rate, like we do in other valuation method. So I'm going to show you the solution by weighted average method, how we determine the weighted average rate. You can see here. So under weighted average method, we calculate a weighted rate, which is very simple to determine. We just calculate the value of units available during that time period in the business. So we multiply the each quantity which is purchased at various time with their respective rate and then add them. So our total, because in this question, this business has started only this year, so there is no opening inventory from the last year. So the total value of units available is the total value of purchases, because before the opening inventory, the total value of purchase is this amount, 100,000 and 200 pula, and the total number of unit received is 2400. So the value of unit we divided by the number of unit, then we get a average unit price, which is 41 pula and 75 tabe. So we use that price to determine the value of ending stock, and, and also the value of issues. Have you seen how we calculate the weighted average rate? Everyone? Hello, can you hear me?
Yes, ma'am. So, ma'am, may you please go up on the slide?
You can't see the Word document?
I can see the Word document, man. I just want to see the question above.
Oh. Okay, here is the question.
So, ma'am, we say 200 times 36, 500 times 38, right? Then we add that together.
Yeah.
Then we also add the units separately, and the answer that we get, we divide it by the total units.
We divide the value of unit, which is purchases, and opening balance, if the opening balance is also there, by the number of units.
Okay, ma'am. Thank you.
And then you can see that how many units were issued and sold out. We assume that all the units which were issued, they are also sold out. So opening balance plus purchases minus issues. So like, so is 700 plus 1200, 1.9. So the value of issued unit is 1.9 times the weighted rate. And when you're calculating the closing stock, the number of unit of closing stocks time rate. Can you please try to calculate the gross profit by using the weighted average method? The formula is same, sales minus cost of goods sold, and cost of goods sold is opening in stock plus purchases minus closing inventory. Everybody try to calculate. Please everyone try to calculate the amount of gross profit. Then let us know.
Ma'am, is the gross profit 77,200?
Everybody get the same answer? $77,000. How much is?
77,200.
No, it can't be. What is the sales price? You are calculating the gross profit, right? So the
Yes,
sales
ma'am.
value is 161.95, like we had here for all of them. 161,500. Then we subtract because cost of issued unit or cost of goods sold is same. which is 79,325. So how much is gross profit?
I got 82,175.
I'm also checking. $82,000. Yeah, 82,175. Yeah, that is the amount of gross profit.
Ma'am, where did you get the 1,161,000?
This is the sales value. I'll show you. Wait a minute. Like here, 161,500. In the question is saying that if the sales price per unit is 85, calculate the net profit by preparing the income statement using the FIFO, LIFO and weighted average method. If the sales price is, so we believe that all the unit which is issued are also sold out. Okay. Yeah.
Yes, ma'am.
Assuming that all all issued units are sold out because they were ready, they issued and manufactured, then they are sold out. So we know that 1.9 units were issued, they are also sold out, and the selling price per unit is 85. So that's how we get that price. Okay, that's how you get it. Then we subtract the cost of goods sold, which is we just calculated. The value of issued unit or the value of cost of goods sold is the same thing, because when you calculate the cost of issued unit, we also calculate like this: opening stock plus purchases minus the value of closing inventory. So same thing we also calculate when we are doing the cost of goods sold. So it's the same figure. This is our gross profit. Then if you want to also calculate the net profit, then we subtract other operating expenses like the other expenses are given there: rent, office salary, maintenance charges. So all of them together, they are 29,000. When you add them, they are 29,000. So we subtract 29,000.
Ma'am, I got 53,175.
Okay, I'm checking. So from this figure, gross profit. 53,000 is 53,175, right? Everybody get the same answer?
Yes, ma'am.
Okay. So that's how we calculate the gross profit and net profit. And these figures, which one we get from cost accounting, we can also use in the financial accounting, right? So everybody understand how to apply the LIFO, FIFO and weighted average method? Let me quickly show the another exercise. So that we can check if we know enough about it. Okay, can you see the question? Can you see
No,
the another
ma'am.
exercise?
Ma'am, I cannot see your screen.
There's no question.
I can see a table.
Okay. It can see what?
The table.
Yeah, on the table, there's a line. Kagoso cow uses the raw material A in the manufacturing of his product and has adopted a periodic inventory system. There are given below information extract from his raw material ledger, raw extract from his store ledger. It's still not seeable. The first sentence
Yes, ma'am, it's visible.
is visible. Okay. So here is the detail about the material A, raw material A from how who manufactured the products, and he adopted the periodic inventory system. So these are the detail. He maintained the store ledger account on monthly basis. So you can see that we have the details of month of March. The opening stock on 1st of March. He has 180 unit where the Pula value where the pull-up value of material is 720. Then on 4th, he issued the unit 120 out of 180. Then 8th of March, he bought again 120 unit with the rate of 552. 11, he issued 90 units. On 14th, again 90 unit was purchased with the price of 432. On 17th, he issued 72 unit, and 21st, he issued 48 unit. So these are the details of their purchases and issues of material. On the basis of this information, you are required to compute the number of unit and the value of physical stock in hand as at 31st March by using the FIFO method. Or basically, you have to determine the value of closing inventory, because when we say physical stock in hand, we are talking about closing inventory on 31st March by FIFO and LIFO method. So if you are applying the FIFO method, the closing inventory from where? Okay, first of all, you have to find out how many unit was available and how many unit were issued. How many units were available, and out of it, how many units were issued.
Ma'am, the amount of units were 510.
Available.
Yes, ma'am, not issued.
And how many issued?
376 were issued.
300. So how many unit will remain as a closing inventory?
One 34.
134.
Yes, ma'am.
Hmm. Okay, so can you determine the value of closing inventory? What is the total value of closing inventory? Okay, first of all, the question is the unit left is 134, right? So which 134 units are left under FIFO method?
Isn't it not going to be on the 1st of March where you see 134 units?
Under FIFO, FIFO means first in, first out. When we are using first in, first out, so the unit you receive first, you have to issue first. Whatever you are receiving first, you are issuing first. So when you are left something, you always left from the latest stock, right? So which one are you left? The total unit available is 510. And out of it, how many issued? Out of 510, how many unit were
376 was
out of
issued.
510, how many unit were
376 units were issued, ma'am.
okay. So how many were left, remain unissued?
134 was left unissued.
So 134 is the closing inventory because that one not utilized, they are still remain at the store, right? So they are known as closing inventory. 134. Now the question is which 134? Which one? You can see the table here, right? Which one is there? So which one? When you are applying the FIFO method, FIFO, first in, first out. So which one you receive first is out. First, which one you receive is out. So if you are left anything, you always left from the bottom, right? Because those who are coming first in, they are also first out. So if you left something, you always left from the bottom. So the last purchase was on 24th of March with 120 units, but we left as a closing inventory 134. So this is not enough. It means another 14 was left from the second last purchase, which was done on 14th of March. So 120 plus 14 from here, that's how it's become 134. Are we together?
Ma'am, why didn't we just take the first unit on March 1st? Because since our closing inventory was 134, and on the
Mm.
1st March, we had 180 units. Why couldn't we just take the first
No,
the
you
first
the
first unit
unit
that we
the
had?
unit was available from it 300 and something 70 something was issued, so we are calculating how many unit was left over from what we had in our store. So this is the unit we had in our store. Out of it, these are issued. You can't take from the first one because you are applying the method of first in, first out. So this unit 180 came first in, so it has been already first out. They are already out for the production. So if you are left something, you always left from the last or second last purchased on the FIFO method, because first in, first out means that the stock which is received at first at the store has been issued at first. Those are issued first. So this one is already issued. That's why you can't take from it. You understand?
Yes, ma'am, I
So
understand.
under FIFO, you only, because this one is already out. But this one is not fully out because the leftover units is 134 and the last one is 120. So it means 120 this one and another 14 from the unit which was purchased on 14th of March. This not all 90 unit was issued, but out of 90, 776 unit was used and 14 are left. Now what is the value of those 14? Because here the total Pula value was given, not the unit price. This 432 is not unit price, is a total value. So what is the unit price? You can take 432 divided by 90. So for Pula, 80 thabe is the unit price of the lot which is purchased on 14. How we calculate? The total value divided by number of unit. So 4 Pula 80 thabe for each unit. Now we are left with 14 units. So you multiply by 14. So the total value of remaining unit is 67.2 plus the value of this 120 plus 624 Pula. So the total value of ending stock is 691 Pula and 20 Thabe. That's how we calculate if instead of unit price, the total value of the stock has been given. Are we together? Just take a picture and try to do this exercise by FIFO and LIFO. I'm also going to post another question tomorrow, which is guys need to attend by all three methods and submit a written answer on a piece of paper, not in the notebook, on a piece of paper on Friday. When you receive the question tomorrow, the solution you have to submit in the class or in my office with your name on Friday. Wednesday, we are starting the new topic, labor cost control. Okay?
Yes, ma'am.
All right. Thank you, everyone. I think we are ending our lesson here. Then we will meet on Wednesday with a new topic. Thank you. If you have any other question, you can raise your question, please. Okay, so we are ending our lesson here. Thank you, everybody. Please practice more questions on this so that you can have enough